Thank you for joining us at xm.com for today's market comment by Marios Hadjikyriacos. I'm Maria Pashurdes. The world's oldest safe haven asset started the week in an explosive manner, shooting up to new record highs, only to get rejected and close the session sharply lower. The intraday range in gold prices was $115 per ounce yesterday, which amounts to more than 5% of the precious metal's value. Behind this reversal lies a tsunami of profit-taking, driven by the recovery in the US dollar and real bond yields, both factors that dampen buying appetite for gold, as the metal is priced in dollars and does not pay any interest to hold. Moving forward, the performance of gold will be decided by a blend of geopolitics, the path of interest rates, direct central bank purchases, and how the economic landscape evolves. In this sense, the coming year could be a fertile period for gold, as the global economy loses steam and central banks enter an easing cycle. The biggest downside risk for gold might be a peace negotiation in Ukraine that exhausts geopolitical demand, although that's probably a story that requires a change of leadership in the US elections next year. A wave of euro weakness continues to sweep through the FX market, with the single currency suffering at the hands of a softer data pulse and speculation that the European Central Bank will spearhead the global campaign of rate cuts next year. By most counts, the Eurozone is already in a technical recession, and with inflation rolling off, there isn't much standing in the way of ECB rate cuts. The dollar and the euro are often described as opposite sides of the same coin, so it was natural to see the greenback mount a recovery yesterday as the euro struggled, especially when considering the rebound in US yields. Whether this recovery is sustained will depend on the upcoming US data releases today, which include the JOLTS report and the ISM Services survey. Shares on Wall Street encountered some rare turbulence this week, with the S&P 500 falling by 0.5% and the tech-heavy Nasdaq losing 1% on Monday. Of course, this follows an astonishingly strong performance in November for these indices, driven by hopes for a soft landing, so this retreat is merely a blip on the radar. Thanks for watching today's market comment here at xm.com.